Good morning, and thank you for joining us for a nonprofit forum this morning. This morning, we're going to be talking about advocacy. And as a social worker, advocacy is something that continues to be near and dear to my heart. It's often the way that we can create the most change for our clients. And so I am excited to introduce Maritza Shea Nelson, Managing Attorney of Law Offices of Maritza S. Nelson, LLC. Maritza is a proud graduate of Howard University, where they received their bachelor's degree in arts for political science before getting their Juris Doctorate from the University of Texas. Their practice focuses on nonprofits and businesses and small businesses, and really focuses on education and on accessibility. And so that is why they are a perfect person to talk about today's topic of the difference between 501c3s and 501c4s and just how much advocacy we can do within those bounds. Before we begin our conversation today, I want to highlight a few housekeeping tips. First off, if you'll look in the bottom of your screen, you'll see a button that says Live Transcript. If you click that button and you want closed captioning, you'll find an option to show subtitles, to hide subtitles, or to the subtitle settings, adjust the size if you need bigger or smaller subtitles. Secondly, there's a Q&A button in that same bar at the bottom of your screen. If you have questions throughout the presentation, feel free to go ahead and type those questions in the Q&A box. What you can do is monitor that box throughout the presentation, and if you see questions there that are already asked that you want to hear more about, you upvote those, and I'll make sure that those get asked during our Q&A session of this forum. If you don't see your question there and you want to add it, go ahead and add it in there. If you're having technical difficulties during the presentation, please use the chat box for that. So I will not be monitoring the chat box for Q&A questions, but we do have somebody here who is monitoring the chat box for technical issues during the Zoom presentation. After this forum, you will receive an email from us that has a link to a survey. So it's a really short survey, and it's how we make sure that we're meeting your needs. So if you would just take a few moments to complete the survey after the forum, we'd really appreciate that. And finally, this session is being recorded. I hope you're okay with that. You are not being seen because this is a webinar as opposed to a meeting. If you're not, I just want you to know in advance that you're being recorded. And with that, I am happy to turn it over to Maritza.
Well, welcome everyone. I am super excited to be here and to just be, going over this really important topic with everyone. It's the one that I get a lot of questions about. Certainly saw a lot of questions about it in the wake of everything that happened, particularly last summer. Just questions about, are we allowed to say anything? What are we allowed to say? How far can we go? We're not being able to fulfill our mission, right? We need to be able to do so much more than what's currently happening. And so I'm going to go ahead and start this presentation here. If we can get the presenter view going. There we go. All right, and hopefully everyone can see that. We've got the right screen share up. All right, so today we're talking about the very important topic of advocacy, particularly as it relates to both 501c3s, right, your typical charitable tax-exempt organization. And then we're also going to talk about how the rules are a little bit different for some other types of nonprofit organizations and why sometimes you'll see organizations that actually have two separate sides or two parts of this coin. So, as I mentioned, I am out on my own. I've got some staff here in my office, but predominantly out on my own. And I represent nonprofits, small businesses, truly like the entrepreneurs, the founders, the visionaries, those type of people. And my entire goal is to help those folks pursue their passion without worrying about all this legal stuff coming back to bite them, right? So when it comes to my nonprofit clients, oftentimes they are startups or younger organizations, sometimes ranging up to, I think some of my larger clients might be at $2, $3, $4 million a year. And, they're trying to figure these these things out, right? They've had this passion. They're really trying to fulfill a mission. They're not sure how much they're allowed to say, right? They're not sure that they can fulfill that mission if they can't get involved in some of the big topics of today. And so that's one of the things that we want to be able to address. Let's see here. All right. Getting a slight technical message. Just bear with us for a moment. All right, hopefully that addresses that. While we're working out the technical issues on the back end, I just want to remind everybody, right, as an attorney, we have to give these disclaimers, right? What we're talking about today is for general information, right? We're going to try to cover as much as we possibly can, but there's always an exception to every rule, unfortunately. There's a lot of gray area in the law. So this is not a substitute for actually forming an attorney-client relationship, right? Attending a presentation doesn't make me your attorney or your organization's attorney. And it's not a substitute for seeking out counsel when you've got those really detailed nitty-gritty questions. So we're going to talk about the general rules. We'll talk about best practices, but I always remind folks, there's always an exception to every rule, unfortunately. I guess fortunately for me, it keeps us attorneys busy and employed. Unfortunately for you guys, it means that sometimes you really do have to sit down and have a consultation to get some of those questions answered. So what are we talking about today? Today, we're going to go over a couple of things. We're going to talk about the difference between advocacy versus lobbying, because that's the really key when we're trying to figure out what can you do with your C3 side of your organization, right? Then we're going to talk about what are the rules around lobbying if you do start to get engaged in some of that. And the big question is whether or not that lobbying activity has become substantial. So we're going to talk about, well, what does that mean exactly? And how can we get, on some safer ground, some safer footing when we're trying to figure that out? Then we'll turn to the topic of, okay, my C3 needs to do my organization needs to do some lobbying. I think it'll be too substantial to do under my C3. What are some other options and how do those organizations start to relate together? And then of course, we'll have time at the end for some Q&A as well. So let's start with the topic of advocacy versus lobbying, right? Most people have heard that a nonprofit organization is not allowed to lobby. And most people take that to mean we can't say anything about any controversial issue ever in life, period, end of story. And the good news is it's not quite that simple. The bad news is it's not quite that simple. So what's the difference here? Lobbying is truly defined as the attempt to influence legislation, right? So what does that mean? Contacting the legislative body. So contacting your state legislators or at the national level, contacting city council at the local level, urging the public to contact those members, urging your staff or the public to contact employees of those legislators for the purpose of either proposing, supporting, or opposing some legislation, right? So it's really about the actual piece of legislation there, or even advocating for the adoption or rejection of legislation. So even a public campaign to say, hey, we think our city council should vote yes on issue X, right? Or we think the state legislature should vote no on, Senate bill, whatever, right? Those are attempts to influence legislation. That is lobbying. Now, lobbying does not include actions by the executive branch or the judicial branch. So for example, having an opinion about a Supreme Court case that comes out this summer, that's not lobbying. It doesn't include actions by administrative bodies. So some of you might be regulated by a particular, administrative agency, or you might be looking at the rules that an administrative agency is planning to adopt, right? Having an opinion about that, being involved in that process is not considered lobbying. So that leaves a wide range of things that our nonprofit organizations can do that won't fall under the umbrella of lobbying, but instead are simply advocacy, right? They're addressing public policy issues in a way that's not lobbying. So for an example, as a nonprofit organization, you can certainly have educational meetings, right? You can discuss issues. You can have meetings with your constituents, your supporters, right? The people that you advocate for to talk about the issues. You can prepare and distribute materials. You can talk about public policy issues in an educational manner. All of those are perfectly permissible. So for example, we'll see nonprofit organizations that have get out the vote campaigns, right? We're not telling you who to vote for. We're not telling you what issue to vote on or how to vote on a particular issue. We're simply saying, exercise your right as a citizen, get registered to vote, make a plan to vote, go out, show up to vote. We'll see nonprofit organizations do, know your rights pamphlets. Right. So again, we're not talking about a particular piece of legislation. We're not even talking to a legislator. But perhaps if you work in, the juvenile justice or the criminal justice fields, your organization might say, hey, these are your rights if you get stopped by police. Right. So we're not talking about, hey, let's pass police reform legislation. We're simply advocating for you to have the education to know your rights. And of course, I think it goes without saying that as a nonprofit organization, you can't support or oppose candidates for public office. So we're not going to get into election law, but I just wanted to make sure that we were all on the same page there. So if your organization is in a position where you're thinking, okay, our mission is whatever it happens to be, right? We've done a lot of advocacy work, but we're just not sure that we can move forward on this issue if we don't get involved in some lobbying. Then what, right? How do we begin to make advances beyond just talking about the issues and actually trying to make some progress on the issues? The general rule is that if you are a 501c3 tax-exempt organization, you cannot engage in what is called substantial lobbying, right? A substantial part of your activities cannot be attempting to influence legislation. If the IRS finds that you have, right, you risk losing your tax exempt status. Now, why is this? Well, if you think about it, when you applied for your tax exempt status under Section 501c3, what you were telling the IRS is that you are going to be operated exclusively for a certain tax exempt purpose, right? Religious, charitable, scientific, educational, right? All those things. Well, if a substantial part of your activities is lobbying, then that calls into question whether or not you're operated exclusively for tax exempt purposes. So, general rule, your lobbying can't be substantial. And so then the obvious next question is, what on earth is substantial? And unfortunately, the attorney answer is, it depends. And I know that's the answer that no one ever likes to get, right? In determining whether or not your organization's lobbying activities are considered substantial, the IRS tells us that they consider all relevant facts and circumstances, which unfortunately is probably just as vague as it sounds. They seem to be especially focused on the amount of time that's spent in lobbying. And so they will ask questions about, well, how much time did both your paid employees spend in lobbying, as well as were you tracking how much time your volunteers spent on whatever that lobbying activity was? And when you add up all of that time, right, all the time your paid staff as well as your volunteers are spending on lobbying, how does that compare to the amount of time that you were spending on your actual tax exempt purpose, right? The purposes that they gave you the tax exemption for, the purposes that they want you to be operating exclusively for. They also seem to really focus on, again, the amount of money that the organization devotes to lobbying, right? And again, relative to the money that was spent on other non-lobbying activities. So if you, for example, organize, a bus trip to go down to Capitol Hill to advocate for a piece of legislation, right? How much time and money did it take to organize the bus trip, to pay for the bus, to hire the driver, to pay for the gas, to print up materials, right? To train the volunteers that were going on the trip, right? All of those things. So as you can probably start to see, like this can be a nightmare of a record keeping requirement. But it's also this sort of, we're trying to compare that to the activities that you normally engage in. So again, that doesn't really tell us what exactly makes it substantial. Like at what point is that too much time? At what point is that too much money? And the IRS has really refused to give us a straight answer to that. They have not provided any hard and fast rules. In digging through the case law, we have seen that there are some old court decisions from back in the 1950s that said, 5% of an organization's time and effort was an insubstantial part of its overall activities. So what I have generally seen is most tax practitioners, when they're doing a client's nonprofit's 990 at the end of the year, they'll say, okay, try to stay under the 3 to 5% mark, right? So less than 3 to 5% of your overall time and expenditures spent on any activity towards lobbying. Now, again, right, this is our best guess based on kind of what we've seen with the IRS, right? But the IRS hasn't given us a hard and fast rule. So as an attorney, we really get concerned when we see these very sort of vague pronouncements and clients try to use that to say, oh, I'm fine, 5%, I'll be fine. I'll be able to get away with that. There are way too many risks here for an attorney's comfort. And so we get concerned with the consequences, right? If you try to bump up against this rule, if you're one of those clients that wants to push the envelope as far as you possibly can, then what are the potential consequences that you're risking? Well, we've talked a little bit about it, but obviously the loss of your tax exempt status. If the IRS determines that a substantial part of your activities or your expenditures in a tax year consisted of lobbying, then you run the risk of losing your tax exempt status. If that happens, all of the organization's income that year becomes subject to tax because you're no longer tax exempt, right? So good luck explaining to your board, right, or your donors, your grantors, your constituents, who's going to foot that tax bill. But in addition to that, like, not only do you lose the tax exempt status, somebody's got to pay that tax bill, but the IRS can also subject the organization to a 5% excise tax on those lobbying expenditures. So now we've got the income tax, we've also got a 5% penalty on top. And compounding matters, and the reason why most of your board members have probably said, hey, let's just not bother, we're not willing to take the risk, is there's also the possibility that the IRS will impose personal liability on the organization's managers. So they can impose an additional 5% tax on your managers, your officers, directors, basically the people that knew that these expenditures were being made and knew that there was the possibility of losing the tax exempt status, right? So again, we're talking about your officers, directors, those people that had some management authority. They were probably the ones in the board meeting who approved the activity, right? They knew that the organization was veering into potentially substantial lobbying activity. They can also be held responsible for an additional 5% tax. And that responsibility is what we attorneys call joint and several, which as a practical matter means that all of those people are responsible for it, but the IRS is allowed to go after the person that can actually afford to foot the bill. And they're not going to worry about trying to split that up evenly or fairly. So that's why you'll often hear nonprofits say, nope, we're not allowed to lobby, period, end of story. So we're just not going to get involved in any issues at all. But as we've talked about, it's not quite that cut and dry, right? You can certainly engage in your advocacy activities. You can do very small amounts of lobbying. So what happens if you're an organization that decides, okay, if we're really going to push matters forward, if we're really going to be able to fulfill our mission, this seems like we're kind of locked into a hole. What do we do next? Well, there is an alternative. The first one is that the IRS has fortunately come out with a much better test for determining how much an organization is spending on lobbying. So if that substantial part test sounds way too vague for comfort, and it is, you can elect for the IRS to evaluate your organization under this more specific expenditure test. Most 501c3s are allowed to make this election. The primary exemption is churches, but there's also an exemption for private foundations that we're not going to get into today. But as you can probably imagine, churches are not allowed to get into this. If your organization is considering getting involved in lobbying, or there's a particular issue that's coming down the pipe that you're like, whoa, things have changed. We've seen this happen at the state house or at the national level. We've got to get out ahead of this. This whole substantial test is way too vague. What do? you can elect to be evaluated under this expenditure test, and you simply have to file a Form 5768 with the IRS, and it's an election by an eligible 501c3 organization to make expenditures to influence legislation. So that way you can get out ahead of it. The test is a lot clearer, right? And we don't have to worry about this vague, is it substantial, is it not substantial? I'm going to go ahead and show you the test here. Obviously, there are lots of numbers and calculations, right? You'll need to be keeping very good records so that your accountant who's preparing the 990 can make sure that you fall under the test and you're not going to run into any issues. But the expenditure test essentially says that the extent of an organization's lobbying activities won't jeopardize its tax-exempt status as long as you don't exceed certain dollar limits. Right. And as you can see over here on the left, it's based on the size of the organization in terms of its annual revenues or its revenues on that particular year that you're filing the 990 for. So generally speaking, what I'll tell clients is that if you're a 501c3, the amount you spend on lobbying should be relatively small in proportion to your overall budget. Right. Typically, I say, think less than 20% and even less than that as your organization grows and becomes larger. So you'll see over here on the left, our smaller nonprofits, what they do is they take a look at, okay, how much are you spending on your exempt purpose? So set aside the lobbying piece of your budget for now. How much are you spending on your exempt purpose? If that number is less than $500,000, then the IRS will say, okay, you've submitted this form, you've elected to be engaged in some lobbying and be evaluated under this test. You can spend up to 20% of your exempt purpose expenditures on lobbying. All right, and you'll see here, as your organization goes up in revenue size, the numbers change. So for example, as you get to the 1 to 1.5 million, they say, okay, you can spend $175,000 on lobbying plus 10% of the amount over 1 million on lobbying, right? So those are the specific numbers if you're really interested. The main point is that you don't want to start to bump up against the high end of that. You don't want to run the risk of going over whatever the amount happens to be. So again, it's something that you'll need to keep a very close eye on, both in terms of your budget planning and then also on the back end in terms of what are you actually spending. They want to make sure that you're spending the vast majority of your budget, obviously, on the purposes that you're actually tax exempt for. And again, if you exceed your lobbying limit in any particular year, then the IRS can charge a penalty or excise tax of 25%. So obviously that can put a big hole in your budget. We always talk about nonprofits scrambling to get as much money in as possible. We all know how difficult it is to fundraise. You don't want to have this 25% penalty come back to bite you because you weren't paying attention and spent too much money on your lobbying efforts. In addition, if you exceed your lobbying limits over a 4-year period, then you can lose your tax exempt status entirely. And again, you're going to go back and have to face back taxes for that entire time period. So the expenditure test is a much better way of going about it if you need to engage in lobbying, but obviously you need to be very focused on the dollars. You need to know what your particular dollar limit is and make sure that you're not bumping up against that. Now, what if you're an organization that says, okay, this is great, but we need to do more than 20%, right? We need the flexibility to do a lot more if we're going to truly advance the mission. We need to be able to influence legislation. Then what? So if you're at the position where you're thinking, okay, we're either going to outgrow the expenditure test or we don't want to be handcuffed by that at all, we want to have a lot more flexibility in what we're doing, then that's where we start to look at other types of 501c3 organizations. It's not unusual clients come into the office and say, okay, I want to start a nonprofit. And I say, great, what kind? And they look at me and they go, what do you mean? So just to backtrack for general information, 501c is actually a reference to the section of the tax code that permits certain organizations to apply for and be granted tax exempt status. All right, the code actually contains 29 different subsections that can be used to apply for tax exemption. So most of us say nonprofit or we'll say charity, we're talking about 501c3. And while a C3 organization cannot engage in substantial lobbying, other types of organizations can. And the most common of these are your 501c4 or your 501c6 tax exempt organizations. Your 501c4 organizations are operated exclusively to promote social welfare, right? So these are organizations, their primary focus is the common good, the general welfare of the people of the community. So some common examples of these might be AARP, right? They are focused on the common good, particularly for the elderly in our community. You can also think of some of the more political, some people might think of these as some of the more controversial organizations are typically organized as 501c4s. So the ACLU, the NRA, the National Organization for Women, right? These are all 501c4 organizations. Even some of the environmental groups like the Sierra Club are set up as 501c4s. So they're not what we think of traditionally as charity, but they are what we think of if somebody were to say advocacy organizations. You go, oh, okay, those groups, right? Those are typically your 501c4 organizations. Your 501c6, on the other hand, these are organizations like business leagues, chambers of commerce, trade associations and groups. These organizations generally group their members together because they have some sort of a common business interest, and their entire purpose is just to promote whatever that shared interest is. The trick with a C6, if any of you are considering this or are set up as a C6, is that the C6 organization itself cannot engage in whatever that business activity is. So they're really just supporting their members who are engaged in a business activity, but they're not themselves running a regular business activity. So when it comes to your C4 and C6 organizations, they are allowed to engage in lobbying. And the reason is that under the tax code, lobbying is considered a permissible method of attaining social welfare purposes, right? It's a permissible way of going about advocacy for a C4 organization. It's considered a permissible way of promoting the common business interest if you're a C6 organization. And not only that, but lobbying can even be their primary activity without jeopardizing their tax exempt status. So organizations, these advocacy organizations that we've talked about are allowed to organize themselves and do nothing but lobbying for their particular issues and still maintain their tax exempt status. So it's not unusual that we'll see an organization that says, okay, the substantial test is way too vague for comfort. I think we're going to spend more than we can or should under the expenditure test. And so they'll start to look at, possibly forming a C4 organization. For my 501c6 clients, I usually see it the other way around, where they've been set up for a while as a C6, but now they're looking at forming a C3 organization for the purposes of raising more charitable dollars. So if you're in that position and you're thinking, okay, this is a lot of information, this is good though. So if I want to engage in significant amounts of lobbying, if we're looking at our mission, we're looking at our strategic plan for the next couple of years, and we think that we're in a position where we're going to need a C4 organization to engage in that substantial lobbying, to primarily focus on our lobbying efforts to really push things forward on that front, then you can set up a related organization. So it's not unusual for a C3 to also have a related C4 organization that they are, from the general public's perspective, it might look like one entity, but they're really two organizations there. So how do you go about setting something like that up? Well, the first step is just like with any new entity. Of course, you have to file your articles of incorporation with the Secretary of State. However, unlike setting up your typical nonprofit, 501c3 charity, if you're going to set up as a C4, then within 60 days of filing with the state, you also have to file another election or notice form, this time form 8976, just notifying the IRS that you intend to operate under Section C4. So you've got 60 days to do that from the time that you file with the Secretary of State. That doesn't mean that you have to apply for your tax exempt status right away. If any of you have been through that process or remember going through that process, you know that that's not a fun or easy process, and you certainly don't want to rush through that. So you file your articles of organization. You then have 60 days to notify the IRS of your intent. And then, of course, you would apply for tax exempt status, just like you would for any other nonprofit organization. Again, it's just a slightly different form. Your 501c4 organizations would use Form 1024A rather than that more common Form 1023 that most of us are probably familiar with, that all of our C3 organizations used. Now, there's an important caveat here. If you're thinking about this, you're thinking through your organization's mission and purpose, and you're thinking, okay, how do we move the ball forward? You're thinking about maybe engaging in some lobbying activities, then you should be aware that as a C3 organization, if you lose your tax exempt status because of substantial attempts to influence legislation, you're not then allowed to go back and apply for C4 status and get your tax exempt status there, okay? So the IRS doesn't say, hey, you screwed up, but now you can go apply for C4. So this is a decision that as you're having these strategic planning discussions, as you're thinking about ways to move the mission forward, this is something that you need to do proactively instead of attempting to do it reactively. And you need to be thinking, okay, how do we house the right activities within the right part of our entity for those and under the right tax exemption umbrella long before there are any questions with the IRS, right? Once the IRS starts asking questions, it's way too late. So again, make sure you're having these conversations with your board, with your funders, with whoever your constituents are early in the process so that you can start thinking through, okay, do we want to apply just under the expenditure test, right? Do we want to file that election form with the IRS? Or do we think that we're going to be involved in much more substantial activities? Do we need to start having these conversations about setting up a related C4 organization, right? If you get to that point and you're going, okay, yeah, I think we will need to have a related organization, but what on earth does that look like? What does it mean to have, both a 501c3 and a C4? What happens then? Well, like any 501c organization, right, your new C4 is its own separate entity, and you really need to think of it that way, right? So it should have its own bylaws. It should have its own board of directors, its own tax ID number, its own bank account, right? It still has to file the appropriate Form 990 every year, right? And in the case of affiliated organizations, which is the situation that a lot of my nonprofit clients find themselves in, the two organizations need to take some steps to maintain their identity as somewhat separate entities. So the IRS and the rules allow for some overlap between the two boards of directors, right? But less is certainly better. And any overlap should certainly be less than 50% of the board. And the two organizations should be having separate board meetings, right? And to the extent that they have committees, separate committee meetings. This can be a tricky one, especially for some of my smaller nonprofit clients to wrap their head around, because it's so easy to think of these things as, okay, here's one umbrella. I've got one organization. We're using, the same name or something very similar. Oftentimes we're using the same logo or something very similar, right? And to start to think of it as two separate organizations, one that's engaged in charitable activities, one that's probably doing a lot of your fundraising because of the preference to donate to a tax exempt C3, versus having a C4 organization over here that's really focused more on legislative areas. And how do we, and really starting to think about keeping those separate, treating those as two very different organizations. But again, you're thinking, okay, but they're related. So how do we sort of work together and coordinate together? And what does that process look like? Well, you'll want to keep in mind this idea of arm's length transactions, right? How the organizations interact with each other should be at arm's length, which is sort of our fancy legal way of saying, we pretend like, right, we truly act like they are two separate organizations, and we treat each other as the same way that we would any other, total stranger of a nonprofit that we were working with. So if there are going to be transactions between the two organizations, we make sure that they're at fair market value. We make sure that they have similar terms as we would expect for two organizations that are not related. So in particular, we'll often use written agreements covering any resources that are shared between the two organizations. So if you're sharing office space, employees, services, names and logos, right? That type of intellectual property. Perhaps you're sharing the mailing list or even equipment among the two organizations. It's not unusual that we'll put together a management agreement or a shared resources agreement outlining, how we're keeping these two organizations separate, how one organization is invoicing the other. So in the case of, say, shared office space, one organization is leasing office space to the other. And I know, again, it seems silly from a layperson's perspective, because even though they're two, you tend to think of them as one giant umbrella. But for legal and tax purposes, we really do want it to appear on paper that these are two very separate organizations. And so working through that. And then, of course, making sure that the two boards of these organizations, and again, we talked about having some separation on those boards and they're not completely overlapping, making sure that a majority of the disinterested directors, so those that don't overlap, are the ones that are approving these transactions, right? So if we're doing, again, shared office space or sharing employees between the two organizations, we're doing that at fair market value, right? We're not cutting the organization a discount because they're sharing our name and mission. We're looking at, okay, what would it actually look like if we were renting office space to another organization, and going with that is, say, the rent amount that we're charging, making sure that our board of directors has looked at it and they've approved that transaction. And it's not just the same core group of people that are working on both sides of it, but there are some separate people here who are looking at these transactions. And then finally, if you're considering setting up a C4 organization, the other practical thing that you should be aware of is that any fundraising solicitations from a C4 organization have to disclose, and the IRS says in an express statement, in a conspicuous and easily recognizable format, the contributions to a C4 are not deductible for federal income tax purposes like they are to the C3 side. And again, I think that's why so often we'll see these close relationships between C3 and C4 organizations, because it's much easier for the C3 to raise money, right? And to let people know that money you can claim on your taxes and get your charitable deduction, versus the C4 that can't make that claim and has to let people know that, hey, this donation is not tax deductible, but it is going to help out with very important, legislative work that we're doing on this side. And so again, it's not unusual that as we talk about like that management or the shared resource type of agreement, where you'll see, okay, the C3 does a lot of the fundraising. And so it's a lot easier for the C3 to house some of those resources and then make transfers to the C4 the other way around. So those are just some of the practical tips that you should be aware of. So again, I know that is a ton of information. We went through that a little bit faster than I had anticipated, but I want to open it up now for questions. I'm sure there are plenty of questions and concerns, maybe some specific issues that you're starting to see or even think about in your nonprofit. And of course, I'll remind everyone, again, general information, right? Nothing that we talk about here is confidential. We're in a big open forum. And sometimes you really do just have to, schedule your consultation and take your 30 minutes to an hour with an attorney. But we're going to try to get through as many of those questions as we can. So Danielle, what are you seeing?
On mute still. Okay, so we have a couple of questions here. One is, would directors and officers insurance cover the fees and the risks associated with brushing up against those restrictions, those tax restrictions?
Oh, that is a really good question. I doubt it. Again, the correct answer is it depends, right? It depends on exactly what is in your insurance policy. But the accusation that the IRS is making, what they're accusing you of when they impose those penalties, is they're saying that the managers and officers, the directors, right, they knew or should have known that you were bumping up against that you were engaging in substantial lobbying activities instead of your exempt purpose. And so because of that, the implication of wrongdoing there, I would be very surprised if your directors and officers insurance covered that penalty. Again, we would certainly try, right? We would certainly ask the insurance to try to cover it. We would certainly look at, are there any intervening facts that might make it appear that nope, the IRS is overstepping its bounds. They really didn't know, right? It's not as bad as it looks. But that would definitely be a bit of a fight, I think, with your insurance company.
It sounds like you're saying that this is really sort of a post-action punitive stance that the IRS is taking towards an organization when you get to that point. So it's not just a fee, but a punitive fee that you're paying.
Yeah, absolutely. I mean, they've already gone back and charged you the taxes because you've lost your tax exempt status, but now they're saying we're going to throw in another 5% because you were lobbying, and now we're going to throw another 5% at your directors and officers because they approved this activity. So this is really, I think, meant to discourage, charitable organizations from going down this road. And that's why, we've got other options, right? There are other ways that you can go about this if necessary.
Great. One of our other questions is the time that's spent preparing for meetings, creating plans, and discussions around legislative proposals considered lobbying, or is that a safe activity?
I think it depends a lot on what exactly the discussion is, right? I mean, it's one thing to discuss lobbying just in terms of, how does this impact the issues that our organization is focused on? How does this impact perhaps the services that we try to provide? It's another thing to be engaged in a discussion around, okay, but what are we going to do about it? Right? Are we planning to actually, take this up with someone in the legislature? Or are we just having internal discussions about, this is really going to have a big impact on our constituents. Perhaps we need to put some other programming around it. Perhaps we need to put some education around it. Perhaps, we need to do a campaign like that. As opposed to, no, we need to start planning how we're going to contact the legislature and say, hey, this is a terrible idea for whatever reason.
So this is around that same concept of planning and intent and all of that. If an organization has identified an issue that is going to affect their constituents, and they have decided they want to do something about this issue, they won't necessarily contact the legislator. They won't be doing anything that directly involves talking to legislative bodies. What would be the line there between advocating and lobbying? So could they say to their constituents, keep an eye out for this specific issue? How would they do that?
Yeah, so the line really seems to be at encouraging those constituents to contact the legislature, right? Or encouraging the constituents to take a position, to say, hey, we're really opposed to Bill X, right? I think that's probably the safest place to draw the line is in those conversations, stick to, here's the issue that we're concerned about. Here's, even perhaps what we think should be done about the issue, but not commenting on a specific piece of legislation, not attempting to draw up, sort of like uniform or proposed legislation that we see some of the advocacy organizations do, but really just focusing on the issue itself. So one of the ones that, I think we're all seeing right now is, what do we do about, say, police reform, right? It's one thing to talk about police reform. It's one thing to say, hey, I think this should be done or that shouldn't be done. It's another thing entirely to say, hey, this bill that, Congress or the state house is considering is good or bad because of blah, blah, blah.
Okay. So the example that pops in my head around that would be, this is maybe too clear cut, but I'm thinking about levies that impact nonprofits, human service levies, et cetera. Talking about the levy to their constituents is okay. Advocating that they vote a specific way is not okay. Am I interpreting that correctly?
Right, because it's one thing to say, hey, this levy exists, right? It's one thing to say, hey, this levy will provide us with funding to provide such and such a services, right? It's another thing entirely to say, hey, you should really get out and vote for this levy, or hey, don't vote for that levy because it's going to hurt our budget or take money away from us or whatever the case might be. Yeah.
Okay. So we have some more questions, excuse me, in our question Q&A box. It looks like, how does sharing social media posts from other groups that do lobbying affect you? So like, where do the goals align? It sounds like if you're reposting something that is advocating for folks to take action, that's lobbying. But if it's information, that's not. Can you clarify that point?
Yeah, that certainly sounds like a situation where it would be considered lobbying, but it's very hard for me to imagine that that would ever rise to substantial lobbying, right? Because, I mean, how much time does it take one of your staff members or volunteers to retweet or share a social media post? I would probably be much more concerned if a client says that they were doing that and then they were doing, paid social media advertising behind it, right? Because now we've really got something that we can keep track of and say, okay, but how much of your budget are you putting towards, pushing this tweet advocating for a particular piece of legislation? And again, like I said, if you bring this up to your board members, right, and you're discussing whatever the organization's social media policy looks like, I think a lot of your board members are also probably going to say, we'd rather not run the risk, right? Why do we need to share or retweet, something that's specific about a piece of legislation? But in and of itself, that's such a small part of time. You're not spending any money on it. It's hard to imagine that ever rising to the level of being substantial.
Great. So another question that we have is, does lobbying for your organization to be included in state and federal funding fall under the same rules as outlined here? Does it matter if those funds are necessary for your organization to be able to do its mission?
If we're talking about, budget that's being passed as a part of legislation, it's still legislation, right? So it's still lobbying. It's, if we were talking about, an administrative agency has a budget, and they're considering, passing or providing grants for, nonprofit organizations, right? That's an administrative agency, that's not lobbying. But if we're talking about at the state house, and they've got to pass that budget through the state legislature, again, you're talking about the legislature, you're talking to legislators, that's still going to be considered lobbying. And so again, the question becomes, is it substantial? Right? Is that too risky, too vague? Do we need to file that notice to elect the expenditure test?
Okay, so the next question is, how about trying to influence how a city spends its dollars, or to get our members to contact a city regarding a specific project? Does that count as lobbying, since trying to influence budget versus trying to influence legislation?
Yeah, so if it's a budget, if it's not a part of the legislation, and you're not contacting the city council members, then you're probably in a pretty good shape. But if you're contacting, the city council members and saying, hey, you really should put this in the city's budget that you guys are voting on next week, right? Again, they're still legislators at that point, that's still lobbying. If we're talking about, the budget's already been passed and it's just a matter of, do we spend the $1 million over here? Or do we spend it over here? You might have a little bit more wiggle room there. But again, I think when you sit down and do your 990, you're going to have to take into consideration, okay, how much time are we spending on that versus how much time are we spending on our actual tax exempt purpose? So you can see where you can kind of start to muddy those waters a little bit at that point.
So our next question is around time spent talking about legislation to membership versus the 5%. So the question is, would an org's membership perception be a factor in whether the organization is overspending on time on lobbying? Meaning, what if the org spends less than 5%, but their email updates to members are made up of a higher percent focused on legislative wins or action alerts supporting a bill?
I don't know that you can look at the 5% just in terms of like, is it 5% of our emails? Because if you look at the Form 990, and I'm not an accountant, so it's been a little while since I've looked at one, but if you look at the Form 990, it's really looking at overall time spent and overall money spent, right? Mm-hmm. So how much time is your staff putting into these action alert emails, right? Or if you've got volunteers doing it, how much time are your volunteers putting into that compared to all of the other things that you do, right? How much money are you spending maintaining that email list and doing these email blasts? right? As opposed to all of the other things that you do. So I wouldn't try to look at it as, well, it's less than or more than 5% of the overall emails that we spend out. It's a bigger question of, how does the time factor in compared to everything else that you're doing?
And so that public perception of an organization being active, politically active, does not really necessarily, isn't the distinction. They can have that perspective, but as long as they are not truly brushing up against that 5%, they should be okay.
Right. Because again, we're not trying to debate this in the eyes of the public, right? And the general public may see a lot of that just because that might happen to be or appear to be more controversial, right? Everything is super political and controversial right now. So it may have the appearance of, oh, that's all that organization ever does is advocates for, blah, blah, blah. When in reality, you may be doing a ton of other things behind the scenes that unfortunately just aren't getting the same amount of PR and recognition in the eyes of the community. But that doesn't mean that your staff is spending more than 3 to 5% of its time advocating for that particular piece of legislation or sending out that action alert.
Okay, so we have one really interesting question around non-management staff essentially using their email all staff to inform them about their own personal political interests that they care about. So the question says that sometimes non-management staff members communicate via all staff channels to encourage their colleagues to contact legislators and influence legislation. How should the leadership in these organizations respond to that activity? Should they intervene and stop the communication, which could be hard on the morale? Or is it okay for the leadership to let this continue, or is there another alternative?
That's a really good question. I'd be curious to see if, is this something that the staff is just doing on its own? For example, I know right now some of my nonprofit clients, it's become very popular that, they've got Slack channels and, your employees are still individual people, right? They've still got free speech rights. They're still interested in various issues. So if it's something like that, where it's not so much the organization itself being involved, right? It's just your employees just so happen to have these conversations on the side, I don't know that I would be too concerned about that. To me, that's very much akin to your organizations, in the pre-Slack days, your employees getting together and they've got, the group text message thread, that they all happen to communicate on. And, they're engaged in the work. They're excited about the work. And so they're talking to each other about these things. I think just from a risk management standpoint, I would probably remind the staff, hey, that's great that you're involved, you're interested, you're passionate. Please don't use your organization email address when you contact your legislators. Please don't, imply that you're doing this on behalf of the organization, right? Stick to your personal account, stick to your personal opinion, contact your personal representatives, and try to draw the lines that way rather than saying, no, please stop being so excited about the work.
That's a great point. It falls in line with, folks who have to take a day off to go to the state house or on those advocacy days to express their personal opinions about whatever's happening in legislation and really keeping those lines very clear. I have 2 more questions here for you. When do you file for the expenditure test? And you may have answered this and I misunderstood, but do you file for that prior to the expenditures as a test before you have made the expenditures to make sure you'll pass it, or do you file after you've made the expenditures?
So you file the notice or the election form beforehand, right? So you're letting the IRS know before you file your 990. This is something that we are planning to engage in. And so that's why I say if you're having these conversations, if you're thinking about it, I don't think it hurts to just go ahead and file the election and say, okay, just in case, right, we'll do our election. And then what you'll find when you sit down with your accountant to do that 990 is there are one of the schedules that they attach to the 990 will then ask questions about, okay, well, what were the expenditures? Right. Not a big deal if that year things were quiet, things were going well. I think we could all use a peaceful, non-controversial year. No big deal to say, okay, we didn't have any expenditures this year. But that way you've got the election in place just in case.
And so along with that, how would you express an hour of time spent on lobbying? And are there tools or calculators available that can help folks track what is hours spent on lobbying versus hours spent on traditional admin?
Oh, that is a really good question. I don't know if there are necessarily specific tools to nonprofits. What I generally hear from some of my clients is that they're already tracking the staff's time just in terms of, which grant they might be, sort of using this particular time for, right? So they're already keeping track of it in that sense. And so it's just a matter of thinking through your internal processes and procedures. Do you have staff, have to keep track of time for other reasons? And can you go ahead and have them say, okay, when you do your timesheet, right, 10 hours goes under this grant for this particular thing, and then you've got 3 hours over here that might have been for lobbying, and then the rest of it is, general time over here. But I don't know that there's a clear, easy cut and dry tool that just does that for nonprofit organizations.
Yeah, that makes a lot of sense. So we have one last question here that talks about the 2017 Tax Cuts and Jobs Act. But if you can talk about how this act and how other tax acts really affect donations for non-charitable organizations like 4Cs and C4s and C6s. Do you think they increased donations? Do you think that there might have been a decrease? How do they impact those?
Not that I am aware of. I know, a lot of my nonprofit clients are definitely worried about the Tax Cuts and Jobs Act, particularly on the C3 side, just because of it changed the way that everybody does their standard versus other deductions or versus itemizing their deductions. And so there was a little bit of concern of, people would see that and they would be less inclined to donate to charity. And what I've kind of heard anecdotally is that organizations haven't really seen that. And we're not sure if it's people just aren't aware that it's not as easy to claim those charitable deductions anymore, or if it was a matter of, at least at the time, the economy was still doing fairly well. And so people continue to make their charitable donations, right? And the bigger issue that I at least hear about with my nonprofit clients is donations go down when the economy goes down. So, depending on whether or not your donors are feeling the impact of a recession from COVID, probably has a much bigger impact on your donations than anything with the Tax Cuts and Jobs Act. And I haven't heard anything at all on like the C4, C6 side as far as that impacting their donations. What I tend to see with my C3, C4 clients is either having their donors be able to pick and choose, do you want this tax deductible or can we use it for the C4 side? Or just depending on their internal structure saying, okay, our default is to put it here, but there's a box somewhere where the donor can say, no, I'd rather it go to the other side.
Thank you. That was our last question. And if we have no more questions, I will just say thank you so much, Shay. This was excellent. Thank you for your time and your knowledge. And I hope that it was helpful to those of you who are watching out there. If you continue to have any other questions, pop those into the Q&A box while we still have a few minutes. Alternatively, you can find us on Facebook. There are consistently conversations over there. I'm going to make sure I give you the right Facebook group before we leave. Please also note that there is an email that will be sent to you afterwards. So keep an eye on your inbox. The Facebook group is called Columbus Region Nonprofits Community Conversations. If you head over there, you can feel free to start a conversation on this topic and hear from your peers to find out how they're doing things and how they're engaging in this work. We love to have those conversations being robust. We got a comment that said, thank you, very helpful and informative. So you're very, very welcome, and thank you to Shay. Maritza, you did an excellent job of explaining this so clearly. Best explanation I've ever heard. So thank you again. With that, I don't have anything else for you. Oh, I do have one other thing. I take it back. Also keep an eye on your inboxes for the Giving USA panel, which is coming up on June 17th, but please check the email because it's wrong in my head, I'm sure of it. But keep an eye out on that. That's going to talk a lot about giving trends. One of the questions we had today was asking about giving trends and what types of things affect donations. You're going to hear tons about that during the panel. So keep an eye on your inbox for that. Thank you so much for attending today, and I'm looking forward to hearing from you soon. Thank you. Thank you, Shay.
Everyone.